James Haynie manages more than $4 billion worth as senior equity portfolio manager at BNP Paribas Investment Partners. His equity best selection fund and equity USA growth fund has outperformed their benchmarks this year. And he's with us in our Hong Kong studio. Good to see you.
Good to see you.
Yeah, you travel here once a year, so we're lucky to have you with us today.
I'm lucky to be here.
I like that, Jim. So what about Ben Bernanke, saying that he's prepared to do more, but does that actually mean that he's going to?
Well, I think he will if he has to. That's really the key. He's been very consistent about his commitment to do what he feels is necessary. We're not confident or sure that he'll need to do more. We agree with some of the more constructive forecasts that they came out with.
Yeah.
And we're not positive he has to, but we don't doubt that he will if he thinks he does.
Now, when you say positive forecast, I assume that's the economic growth forecast?
Yeah, the ratcheting up of the growth rate, the improvement in the employment picture, as high as 7%, a 7 handle seems unemployment. It would really be the first time in years. And to us, if we can get to 7 point something unemployment,
right,
the stock market will be higher from here.
It is a bifurcated market right now, as Lloyd Blankfein said, because when you take a look at the corporate earnings, 80% of companies have beat so far in this quarterly results. But then take a look at the economic data that you're getting. You have durable goods orders at its worst in 3 years. Consumers are spending, apparently, with retail sales numbers up. How do you read it? Do you look at the corporate side? Do you look at the economic data side?
Right. Well, we focus mostly on, the feet on the ground, so what the companies do. And you're right, the 80% number we're seeing so far, if that continues through the rest of the S&P 500, would be the best quarter ever in terms of the percentage of companies beating. And I think what's most important underneath that is that so far of those companies, 2/3 of them have beaten on the revenue side. That's been an argument a lot of people have had, is that yeah, they're beating on earnings by kind of squeezing margins, but look at the revenues. And to us, it's really healthy that we're seeing a healthy amount of revenue beats as well.
Yeah, so we just showed you the chart, our viewers the chart about the Cumberland Advisors saying that if you judge on the scale right now of the past two bull markets,
right,
we've got 2 more years to go in terms of stock market gains. Do you think that's true?
Well, we certainly think there's great value in the market, whether it's for 2 years. Obviously, it depends. What you see between now and then, whether it's in price movement or whether it's in the underlying fundamentals. But seeing what we see today, we think that there's good short-term value support, and longer-term, there's a lot of potential with housing bottoming and turning around, with the United States becoming one of the fastest growers of oil exploration. There's all sorts of things that we think can ultimately support the market.
Right, and taking a look at your stock picks, not surprisingly, you got Apple up there, right?
We do have Apple.
It's made for $50 overnight for each share you own.
That's a fun day. There are a lot of happy people back in Boston. Apple to us is really a victim of its success, really, from an investment standpoint. I think people struggle to wrap their arms around the high stock price, the high market cap, the kind of mind-numbing number of phones they sell.
Right.
And we think if you strip that away and just look at the numbers, a company that can grow at 20% this year and next, and a high, say, single-digit, low double-digit rate after that, 20% of its market cap in cash,
right,
10, I guess now 11 times earnings after today. What's not to like? Okay,
so do you count the gains at this point with Apple, or do you just ride it for another 12?
We don't. We actually trimmed things back a little bit with Apple in early April because we did think it was a little bit ahead of itself. Obviously, it's right back where we sold it. So, but our bias in general is to become more invested as opposed to less invested.
Okay, and the other stocks you like, Las Vegas Sands as well, and Discover. But what I really want to talk to you about is, that old age adage, is that going to come into effect this year? We're heading to May. Do you go away at that point?
Well, we hope not. I mean, certainly there's a lot of rumblings. We have sort of would be the 3rd year in a row where you get the year started off well, and then in April the cracks start to show, and the fun is over. We don't think you do go away. Obviously, we don't expect returns to compound at the rate they've compounded so far this year. But our expectation is that the U.S. equity market will be higher at the end of the year than it is today.
Okay, James, that's some nice optimism this morning. Enjoy the rest of your trip across the Asia Pacific. Nice to see you. James Haynie there of BNP Paribas Investment Partners.